Disclaimer: all information in this video is meant for educational and entertainment purposes only. Before making any decision, you should double-check the nature of any product or service, including its legal status and relevant regulatory requirements, and consult the relevant regulators' websites. Are you interested in creating a strong investment collection that stands firm in all market conditions? Dividend Kings are your go-to choice. These top-tier firms have consistently paid and raised dividends for a minimum of 50 years straight, offering long-term investors the ultimate in dependable earnings and expansion. In this video, you'll learn about Dividend Kings and their value. We'll cover 7 leading choices for new investors. You'll get insights into their dividend yields, growth prospects, and why they could be ideal for your strategy. Perfect for beginners or those seeking diversification, these kings might enhance your portfolio's performance from 2024 onwards. Make sure to like this video and subscribe to Invest Easy for more tips and tricks to achieve financial freedom. So what are Dividend Kings? Dividend Kings are top-tier firms that have boosted dividends for 50 straight years or more. They are recognized for their strong dedication to enhancing shareholder wealth with consistent dividend hikes, even during tough economic times. To achieve Dividend King status, a company must boost its dividend payout annually for at least 50 consecutive years. Unlike aristocrats, membership in the S&P 500 isn't required. This elite group has under 50 companies currently. Benefits of investing in Dividend Kings. Investing in Dividend Kings offers several advantages. Long-term stability. Their ability to increase dividends consistently over decades indicates resilience and adaptability. Reliable income. You can count on these companies for steady dividend payments, making them attractive for income-focused investors. Growth potential. Many Dividend Kings are well-established companies with strong market positions. Some companies, like American States Water (AWR) and Dover Corporation (DOV), have been increasing their dividends for an impressive 69 and 68 years respectively. These long-standing Dividend Kings often belong to sectors such as utilities, industrials, and consumer goods, which tend to have more stable cash flows. Why should you invest in Dividend Kings? Dividend Kings are the cream of the crop when it comes to dividend-paying companies. These elite stocks have raised their dividends for at least 50 consecutive years, showcasing remarkable financial strength and durability. Here's why you should consider adding them to your portfolio. Stability and reliability. Dividend Kings are companies that have withstood various economic challenges, such as inflation, recessions, market crashes, and technological changes, while consistently growing dividends. They are resilient and can adapt well. Many of these firms are in steady sectors, such as manufacturing, essential goods, and energy, which are about 66%. This makes them a great choice for people who want a reliable income source for retirement. Compound growth potential. One of the top reasons to invest in Dividend Kings is their compound growth potential. These stocks can grow in value and, by reinvesting dividends, can yield substantial long-term returns. Companies such as H.B. Fuller and ITW aim for high single to double-digit yearly growth, making them attractive for long-term investors seeking solid gains. Inflation protection. In an uncertain economy, Dividend Kings protect your investments. They give steady dividend hikes, keeping your spending power strong over the years. Firms like PPG and Nordson are good at making money and still grow dividends in tough times. They're a key part of a safe, spread-out, long-term plan for your money. Now, let's look at the top 7 Dividend Kings. Number 1. AbbVie, ABBV. AbbVie is a global pharmaceutical company with a strong focus on immunology and oncology. Spun off from Abbott in 2013, the company has built a robust portfolio of drugs, including Humira, Skyrizi, and Rinvoq in immunology, and Imbruvica and Venclexta in oncology. In 2020, AbbVie expanded its reach by acquiring Allergan and adding new aesthetic products, including the popular Botox. You'll be amazed by AbbVie's dividend history. They've been paying and raising dividends for 52 straight years, making them a Dividend King. Now, they give a 3.65% forward yield with payments every 3 months. In the last 10 years, their dividend has grown 15.9% annually. Despite concerns over Humira's 2023 patent end, AbbVie looks positive. New drugs Skyrizi and Rinvoq had big Q1 growth, up 47.6% and 59.3% globally. They're also growing through strategic acquisitions. They paid $10.1 billion for Immunogen to get into ovarian cancer, and they're planning to spend $8.7 billion on Cerevel Therapeutics to boost their brain drug lineup. Analysts predict a 1.5% full-year revenue jump and a 1.13% earnings increase for 2024, with continued growth anticipated in 2025. AbbVie's moderate 51.5% forward payout ratio suggests a stable foundation for maintaining and possibly enhancing dividends. Number 2. Consolidated Edison, ED. Consolidated Edison, known as Con Edison, runs a massive energy system that supplies power to more than 10 million people in New York City and Westchester. It has 3 main parts: Con Edison of New York for electricity and gas, Orange and Rockland Utilities, and Con Edison Transmission. In New York City, it gives electricity to about 3.6 million people and gas to 1.1 million. Plus, it offers steam service in some Manhattan areas. Con Edison boasts a notable history of dividend growth, having raised them for an unbroken 50 years, earning it the respected Dividend King status. It now provides a 3.28% dividend yield, so a $100 investment gives you $3.28 yearly. The current annual dividend is $3.32 per share, with a 60.74% payout ratio. Despite being well established, Con Edison keeps looking for new ways to serve future energy requirements. They're putting money into cleaner, more efficient energy options and creating tools for customers to manage their power better. With about $12 billion coming in each year and $62 billion in assets, they're still a big player in the energy business. Even though they give out more than the suggested 60% of their earnings, their long record of increasing dividends and stable setup hints at reliable returns going forward. Number 3. Target Corporation, TGT. Target Corporation is a top retailer known across the U.S., with stores in every state and Washington, D.C. They sell a broad variety of goods, like baby products, beauty supplies, clothes, electronics, furniture, groceries, and home items. They also have unique features like eye care, clinics, home delivery, and photo services. Target stands out with its brand names, such as A New Day, Future Collective, Good & Gather, and Project 62. They're not just a store, they own Shipt for quick deliveries and Roundel for media needs. Target has a strong history of growing dividends for 52 straight years, which shows it's good at making money and giving back to its shareholders. Right now, for every $100 you invest, you get $3.36 in dividends each year. The company gives these payments out 4 times a year, totaling $4.48 per share annually. They're careful with how much they pay out, keeping it at 48.96% of their earnings, which is a good balance between growing the business and keeping investors happy. This should keep dividends stable and growing for the future. Target continues growing, planning new stores like the upcoming one in St. Louis. They're also introducing a store companion chatbot in June, powered by Gen AI, to boost customer experience and operational performance. Additionally, they're teaming up with FiberTrace and Cargill for real-time tracking of U.S. and Brazilian cotton throughout the global supply chain, aiming for sustainability and transparency. With over 1,963 U.S. stores, nearly 60 supply chain facilities, and a team of over 400,000, Target is set for ongoing expansion and flexibility in the evolving retail industry. Number 4. Emerson Electric, EMR. Emerson Electric is a worldwide firm offering advanced solutions to industrial, commercial, and home markets. They specialize in automation, climate tech, and tools and home goods, leading in multiple sectors. Emerson Electric is a notable dividend king with a strong history of over 50 consecutive years of dividend increases. They pay dividends every 3 months, and as of now, they give $0.525 per share. For the year 2024, they promised the same $0.525 per share for the first 3 of those quarters. This shows they care about their shareholders and are financially solid. Emerson Electric's outlook is positive, with projections showing earnings growth exceeding the U.S. market average by 17.9% annually. Although annual revenue growth of 5.9% is modestly below the average, the company's EPS is set to rise by a notable 18.8%. Analysts foresee a robust 22.1% ROE in 3 years, hinting at efficient profit generation from investments. The stock trades at a 12% discount to its intrinsic value, which could be appealing for long-term investors. With earnings likely to surge 55% in the coming years, Emerson seems poised for growth and stable dividends. Number 5. Lowe's Companies, LOW. Lowe's, founded over 70 years ago, is now the world's second biggest home improvement store. They have more than 1,700 shops across the U.S., providing products for home projects like fixing, renovating, and decorating. Most of their customers are people doing home projects themselves, about 75%, and the rest are businesses, about 25%. You'll be amazed by Lowe's consistent dividend history. It's been increasing annually since 1963, making it a dividend king. Right now, you can get a 1.91% dividend yield over the next year. In the last 10 years, Lowe's had a superb average yearly dividend growth of 19.6%. Lowe's has good growth potential, with earnings likely to jump 55% in the coming years. It has been growing faster than most of its global rivals, with a yearly average of 7.4%. They're working on making it easier to shop online, getting products to stores better, and adding more choices to boost sales. They're positive about the future of home improvement because people have more money to spend and home values are rising. Number 6. Genuine Parts Company, GPC. Genuine Parts Co., GPC, established by Carlisle Fraser in 1928, is a top global service provider focusing on automotive and industrial part distribution. Starting as a single store in Atlanta with $75,000 yearly sales, it has evolved into a significant company. GPC now runs with over 60,000 employees and 10,700 locations in 17 countries, mainly serving North America, Europe, and Australasia. It's structured into 2 key areas, Automotive Parts Group and Industrial Parts Group. You'll be delighted with GPC's dividend history. For a remarkable 52 straight years, they've raised dividends, making them a dividend king. At present, they provide a 2.91% dividend yield, which translates to $2.91 annually for a $100 investment. The dividend is $4 per share with a 44.43% payout ratio, indicating a fair mix of shareholder rewards and business reinvestment. GPC continues growing, both naturally and through strategic acquisitions. They recently bought a company for their U.S. automotive branch, showing they're serious about expanding. They do well because they offer good products and fast, dependable service. With a strong market presence and steady financial results, GPC looks set to keep growing in automotive and industrial spare parts areas. Number 7. Colgate-Palmolive, CL. Colgate-Palmolive, founded in 1806, is a big company that makes everyday things we use. They work in 4 main areas: taking care of our mouths, bodies, homes, and pets' nutrition. They have a lot of different brands and sell products almost everywhere. You've probably heard of Colgate for your teeth, and Palmolive for soap. You'll be quite pleased with Colgate-Palmolive's dividend history. They've been raising dividends for 61 straight years, which is long for any company. And get this, they've been giving dividends without a break since 1895. They're also looking good for the future, aiming to grow their earnings by 8% each year for the next 5 years. This is thanks to some clever strategies like focusing on new ideas, improving their products, and growing their pet food business. In the last 3 months of 2024, they saw a solid 7% rise in sales, mostly from up-and-coming markets. Dividend kings are great for investors who want reliable growth over time. They're companies that have raised dividends for 50 years straight, even through tough economic times. The 7 picks we talked about have solid foundations and good chances for more growth. They're worth looking at to boost your investment portfolio. As you choose where to invest, remember that dividend kings offer consistent earnings and growth potential. However, it's essential to spread your money across different companies. They each have their strong points and challenges, so do your homework and pick investments that match what you're comfortable with and what you want to achieve financially. Mixing these reliable dividend players with other investments can help you build wealth and feel more secure in the long run. So, which dividend kings or dividend-paying companies do you think are ideal for long-term investments? Let us know your thoughts in the comments section below. Don't forget to like and subscribe to Invest Easy for more tips and tricks to achieve financial freedom. By subscribing, you'll be the first to know about our latest videos packed with simple investing strategies, money-saving hacks, and expert insights to help you grow your wealth. Click that subscribe button and bell icon now so you never miss an update.